Hey guys, AKIL'S here. Welcome back to another video. Today, I'm gonna give you some very important tips on and hopefully stop you from making a very terrible mistake. Now, before we get into things, I want to cover two topics. One, yes, it is beard season. If you have been noticing it, we're gonna grow it as big as we can until the wife tells me to stop and I'm back to shaven and probably better looking. And two, we have an upcoming year-end massive free online trading workshop coming up in November. I know it's a long time away, but I want to give you the heads up so you can pencil it in. We don't have dates or times or anything like that yet, but keep your eyes to this space and we'll fill you in on the details. You don't want to miss it, and the time is near. I don't know why I did that. It sounded better in my mind. Anyway, in today's video, I'm gonna walk you through a conversation that we had in my live trading room this morning about stop losses. And one of our traders brought up something that I commonly hear from traders that I speak to outside. Sorry for the planes and noises in the background. Thought it was a nice day, so I have the window open. And of course, as soon as I hit the record button, everything in the world starts getting loud. But I want to walk you through why I thought this was not the smartest idea and hopefully stop some of you guys from making the same mistake. Now, before we hop in, when I say mistake, I want to clarify it, right? So I've been trading for a very long time, right? I've been trading for 18 years. I've been coaching for 12 years. So I've seen it all. I've seen the good, the bad, the very ugly. For you guys that listen to the Trading Coach podcast, you know my story and you know about my rock bottoms and you know about my successes as well. And I've gone through many phases of my trading, good, bad, right? But also stubborn and accepting, meaning that when I first started off trading, I was very stubborn in the way that I thought. And it's like my way of trading, my philosophy has to be the way that you do it. It's the only way you can make money, blah, 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 right? A lot of the stuff you hear out there today. But over time, as I've experienced different experiences in my trading, as I've spoken to some of the greatest traders out there that trade much differently than me, and of course working with traders as well, I've come to understand that there's really no black or white, wrong or right in trading. There are things that traders do that are wrong and get them into trouble. There are things that professional and successful traders do that are right that make the path to success easier. But as far as like one thing that is wrong and one thing that is right, and that being the ultimate decider between a profitable or non-profitable system, that's not true. So take this with a grain of salt. This is just my opinion. This is just my philosophy. You can certainly be profitable doing the exact opposite of whatever I say in this video. But I do think it's helpful in my experience to at least kind of consider some of the things that I'm talking about. All right, I'm going to shut up. Let's hop in. But this is a good, if it lower closes, this is a good relief or reversal type of pattern. You wouldn't use the 50% risk if the ATR is too big. You wouldn't use what's the 50% risk? I don't know what that is, but if you explain it to me, I can answer your question. The same size of the entrance target probably has another name. The same size as the, oh no, I don't do that. The reason I don't do that is because, and I want to say this in the most polite way possible, it doesn't make any sense to me. So let me walk you through, and this is my philosophy, guys. I'm not trying to shame everyone. I just want to tell you, I'm very purposeful in the market. So I think the idea is this, right? We look at our target area and we look at our stop loss. And I say that my stop loss is 30 pips away. So therefore, I'm going to put my stop loss, if I want 1-to-1, 30 pips away, or I'm going to put it 15 pips away, right? Does that make sense? I'm going to put my stop loss the same amount of pips, or in this case, half the pips of my target. All right. So that is the method in which we're referring to, where my stop loss, or sometimes the other way around, my target is based off my stop. So in this case, my stop loss is based off half the distance to my target. Therefore, I have a really good 1-to-1. Now, the question that you have to ask yourself is this: does your stop loss serve any purpose, or is it just completely random? And I would like you guys to answer that question. Do you have a purposeful stop loss, or is it a random stop loss if we base it like this? And maybe random is the wrong word, but unpurposeful maybe is a better word, because it's not random, it's there for a reason. But the question is our stop loss in a place that actually helps us, right? Because where should our stop loss be? Who can answer that question for me? That's a serious question. Where should our stop loss be? Not like literally a price point, but in general. We want our stop loss to be at a place where what? Where it offers protection, right? A place where pretty much we know we're wrong, right? If price gets to our stop loss, we're confident and comfortable saying we're wrong. Would you guys agree with that? It's like, okay, yeah, my prediction is wrong because you got here, and if I was right, you shouldn't have got here, so you got me, right? So if we're basing a trade off of this formation and our stop loss is right here, is this a place that tells us we're wrong? If price were to come up here and do this, is our prediction wrong? Do we know it's wrong at this point? I don't think we do, right? Because we've seen it the last couple times where price has come down, spiked up, come down, spiked up. Even this one, right? We came down, spiked up, and still continued down. So knowing that our stop loss is in a place where we could be stopped out without knowing we're wrong, and with a good chance of the market still being all right, or still telling us that we're right, is that a quality place to put a stop loss in your opinion? My answer would be no, right? To go back to a pattern example, right? We know that with advanced patterns, our protective point is our X leg, right? We know that the pattern is invalid if this X leg is broken. Therefore, our stop losses want to be above the X leg. So if I were to enter a trade here and put a stop loss here, it's a wasted stop because the pattern could still be valid and I could be stopped out, as we've seen with many patterns that travel higher into the range. So in my opinion, it's a wasted stop because it doesn't offer us any protection. Now, again, if you've tested a really tight stop, like say you're a breakout trader, that's a different story because now like your numbers have told you that, hey, I can put a stop loss at a 3D2 retracement of the breakout candle, and that's enough that I need, right? When I did the DKC strategy, remember my stop loss was a 618 of the candle, because I know if price traced more than 618%, 61.8% of that particular candle, then I was wrong. But that's something that is not random. It's purposeful. It's tested. There's numbers to back it up. In this situation, the only reason we're putting a stop loss here is to make the trade work. The only reason we're putting a stop loss here is so that it gives us a quality risk reward. We're looking at ourselves and saying, hey man, I would love I like this trade. I want to get involved in this trade, but the risk reward just doesn't work because my stop has to be here. Well, in order to get in this trade, I can do either two things. I can increase my target, which gives us the same exact conversation in the other way, or I can reduce my stop to make it work. So it's a classic forcing the trade type of scenario that we're doing here. As sometimes the ATR could be so big, would you use structure? Well, the ATR is always based above structure. So our most recent level of structure is this high. So the ATR is above this high. So the ATR does use structure. Yes. Any other level of structure would just give us an even bigger stop loss. That's further back. So I hope that makes sense with why I'm not a big fan of that method. I'm not a fan of any method of just, unless you have something, I'm not saying it doesn't work, right? Because again, I've had strategies that are simply like, hey, I'm going to take a 2-to-1 risk reward every single time, and more day trading strategies where it's just kind of a frequency deal where I want to get in and out, in and out, in and out. But I believe in having purposeful stop losses and purposeful targets, meaning that my stop loss is in a specific area for a specific reason. My target is in a specific area for a specific reason. In general, my stop loss is put at a place where price, if I'm right in my prediction, price should not hit that level. And vice versa, my target is placed in an area where if my prediction is right, price should hit that level. Because we see it from the other side as well, where traders will be like, well, okay, well, Akil says never move his stops, right? So I'm just going to move my target all the way down here. And I get this on a daily basis. And I asked it, my go-to question, I already have it typed in, is like, do you think price is going to hit that level? They're like, no. Then why the hell do you have a target there? Well, because it gives me a 1-to-1. And I'm like, okay, let's back up a little bit, right? In order to make money, right. Price needs to hit your target. Yep. But your target is set in a place that you don't actually think price is going to get to. Is that correct? Yeah. So, and I just keep saying so until it hopefully it clicks. And if it doesn't click, I exit the conversation. They're like, yeah, so what, Akil? So I should double down? No. Right. So those are things that we need to consider. We need to accept the fact. And we're looking at one right here. I told you I like this trade. Stop loss doesn't work. Risk reward doesn't work. Sometimes, and I would even argue oftentimes, right, a little bit up from sometimes, you're going to deal with situations where everything doesn't line up. Again, we need 3 things to line up. We need entry, stops, and targets. That's how we create our profile. We need price action to be, one, in the right scenario. After it's in the right scenario, we need to make sure our stop loss is in a good level. We need to make sure we can have targets at a good level. We need to make sure that ratio meets our rules. And then we need to wait for a reason for entry. And if all 3 things don't line up, we can't take the trade. And if you can't take the trade, guess what? Get used to it. That's part of trading. I can't tell you how much analysis I do where I like stuff and I can't actually get involved. And the internet doesn't understand. I come back the next day, the move did exactly what I thought. And I'm like, man, Akil, awesome call, man. You're the dude. And I'm like, yeah, I didn't get involved. They're like, well, why not? You called it. I'm like, yeah, but I didn't get my reason for entry. Yeah, but you said it was going to go there. Yeah, I know. You don't think I know that? Right? I know, but I need my reason for entry. Oh, man, that sucks for you. I'm like, no, it doesn't, because bigger picture, right? Like the pound yen trade earlier, it's early this week, bigger picture, doing so is going to save me more than it's going to hurt me. I'm going to get hurt on a few occasions, but more so it's going to save me. It's going to keep me out of bad trades, and keeping me out of bad trades keeps me from going broke, and keeping me from going broke keeps my family alive. So, but it's part of trading. And if you ask any professional trader, they'll tell you, like, yeah, we see a lot of things that we like and we wish we can take. It doesn't line up. It doesn't make sense. So that's my long-winded opinion on that. Hope you guys enjoy. Hit that subscribe button before you go. Also, check out the Trading Coach podcast, available 3 times a week on your favorite podcasting app. Until next time, play and trade your plan. I'm out.
I want to be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain, I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints, money, clout and fame, mud, disease, a plague, we all love to hate, have to play the game, have to make a name, all our insecurities are on. This is